Welcome back to another episode of the Dig Deep the Mining podcast. And today's guest is John Ryan, CEO and Director of Gold Express Mines, a multi-asset mineral resources company focused primarily on the acquisition, exploration, evaluation and development of precious metal properties across the US. John is a mine engineer by background. He also studied finance, enabling to start, develop and operate a handful of natural resource companies during his career. He also served on boards of many companies, although I'll let John divulge into that in more detail. So that's welcome John to the podcast. How you doing, John?
I'm doing great. Thank you for inviting me. Appreciate it.
No, that's great, and good to get you on the show. I wondered if you can give our audience a background about yourself, about your career. Obviously, you had quite a few years in the mining industry, so I appreciate if you can tell us a little bit more about yourself and about your career.
Absolutely, be happy to. So I grew up in North Idaho in the Coeur mining district, which a lot of people, it's pretty well known mining district, one of the largest silver mining districts in the world and the largest silver producer in the United States. And actually the virtual background there behind me is a head frame of the Hecla mine, which is the original property that Hecla Mining Company grew out of. The mine was founded around the 1885, 1888 time period and produced till about 1943. It was a major producer for Hecla for many, many years, base metals and silver. So my family's 4 generations of mining people going back to Leadville, Colorado in the 1870s. And I have a bachelor's degree in mining engineering from the University of Idaho. Got that in 1985. Moved on, I did a 4-year naval officer commitment, stationed in Newport, Rhode Island on a fast frigate there, a Knox class frigate. And after that, got a law degree from Boston College Law School. Then moved back out to North Idaho and pretty quickly got myself back involved in the mining sector, teaming up with my longtime business associate, Howard Crosby. Our first company was Royal Silver Mines, traded on the OTC bulletin board at the time. We had projects in Idaho initially, and then actually ended up in Chile and Argentina, frankly, with some projects which were very promising projects, but got cut off in 1998 by the Bre-X fiasco, which kind of shut down junior miners for 2 or 3 years, if you might recall that period. It's quite a ways in the past now. But anyway, ultimately, we were pleased with that company. Royal Silver turned into an oil and gas company in about 2001 or 2, and we were able to have some success in the oil and gas business and listed on Amex and grow it to a fairly healthy market cap before it got sold to a private equity company. In 2002, actually, right at the beginning when gold was kind of lifting off from sort of the $300 per ounce range, myself and Howard and 2 geologists from Nevada formed a company called Western Goldfields with half a dozen prospective Nevada properties. Very quickly, we ended up negotiating with Newmont on the Mesquite mine in Southern California, which is now owned and operated by Equinox, but at that time it was closed. The heap leach was still producing gold, but the mining fleet had been removed by Newmont. Anyway, we bought that project for a total of about $15 million, if my memory serves correct. About 8 of it was a loan from Newmont, which we were paying off the cash flow off the heap leach. Ultimately, that project was acquired by Randall Oliphant. It became part of New Gold. Western Goldfields was merged into New Gold, or became part of New Gold. And the story from there is Mesquite grew into a 4.5 million ounce resource from about 900,000 ounces that Newmont had it pegged at. But of course, Newmont was doing their numbers at $325 gold back then. So we knew it was a lot bigger, and Newmont felt it was too small for them. So it was a perfect combination, perfect situation, frankly. But it turned into New Gold, which operated it for whatever it was from say 2005 when they got it into production, or 2006, all the way till 16 or 17, or I can't remember exactly when Equinox bought it 2 or 3 years ago, and it's it's still got a pretty decent little mine life ahead of it. So it's been a big producer, but that tells you, what you can buy at the bottom of the gold market, right? And people that were initial early shareholders in Western Goldfields obviously did very well. And we had some institutional kind of people involved as well. And people still come back to me and say, that was one of the most amazing purchases we've ever seen executed in the mining business. And it was just frankly dumb luck, if you really want to say it. Toby Mancuso, one of the directors and actually the president of the company, happened to make a phone call to the right person at Newmont. That's what happened. So that, that's one thing that we're talking about, how success in this business, and part of it is in fact definitely luck. 2004, I started a company called High Plains Uranium, which a guy named Jim Boffman, who I still work with, a geologist out of Wyoming, a friend of mine, Kurt Hoffman from North Idaho, Howard, of course, was involved. And we started off with $250,000 private placement from a high net worth individual, because we liked the looks of uranium at that point in time, 2004, summer of 2004. And again, we went out and looked at a lot of old data, historic data from the 1970s, when companies were drilling uranium, and a lot of those projects just went by the wayside when 3 Mile Island happened, right? And the uranium price got knocked down. And by the way, uranium stayed down because of the fact that that we had the nuclear arms built down, which created a lot of uranium supply. But the lesson here was, again, we happened to get data from by this time, these are guys that were geologists that had retired, that had data stored for 20 years and we, for 30 years, we negotiated deals on the data with them. And, again, blind luck. It was one property, really, frankly, that made the company, a property in Wyoming that a group, Energy Metals, just happened to need. They wanted it. They had half of it. We had the other half. And that was that one property out of the 8 or 10 properties we had that basically caused Energy Metals to negotiate a buyout of the company in 2006. And Energy Metals 4 months later was bought out by Uranium One. So again, you just don't know exactly what you're going to stumble upon or luck into or happen to stake, right before somebody else decided to stake it. And in this case, it was just one property. And by the way, Uranium One has been privatized at this point in time, and you'll still see High Plains Uranium as a subsidiary. And the chairman of the company now is listed as Putin because the Russians bought up Uranium One. It's an amazing story. But that was 2004 through 2006. In 2006, again, we did an early SPAC in the mining business in 2006. We actually raised on the London AIM over $100 million for a mining SPAC in 2006. There were quite a few SPACs happening back then on the London AIM. A friend of mine, Nathan Lowe from Sunrise Securities, was kind of driving that, and kind of, he says he's the inventor of the SPAC. Okay, I don't know if he's the inventor or not, but he sure did about a dozen of them very successfully in the period 2005 to say 2008. But anyway, we did a SPAC that was about 100 million plus SPAC, and we were looking for deals. And I was calling people. I was calling, people like Hecla Mining Company or Newmont or whoever, just saying, do you have any properties for sale? And it was, good old cold calling, right? You hope you reach the right person. As it turned out, I called Mitch Krebs, who was then the VP of corporate development of Coeur. Of course, he's now the CEO. And I said, do you guys have anything for sale? And he says, no, not really. Don't think so. But about 2 weeks later, I got a call back from him, and he said, we're interested in possibly selling the North Idaho assets of Coeur, which, you're undoubtedly familiar with, the Galena Mine and such. And I said, yeah, I'm familiar with it. I actually worked there as a summer college student, So, it was middle of April of 2006. I flew out to Coeur d'Alene, met with Mitch and Dennis Wheeler, who was then the CEO and chairman. And we negotiated the $15 million price for the entire Galena complex, including the Coeur mine and all their patented claims in the silver belt of the Coeur d'Alene district. And it was April 15th, and Dennis told me, he says, John, you got to close this by June 1st because I want to have these numbers in my June queue. And I says, okay. And he goes, you're getting a steal on this property. And I said, yeah. And he goes, but my market cap's going to go up a lot more than the purchase price when I get rid of the Galena. I love the Galena, but he goes, it's a high cost mine, and it is raising our overall cost of production per ounce of silver. And when I sell it, my analysts tell me that the price of my stock is going to go up $50 to $100 million. So not only I'm getting the 15 from you, but I'm getting a big bump in market cap. But it put us on a tight time frame, frankly, 45 days to do due diligence and everything else. And we did a bridge loan and put in our own personal money and got it done. But we had to put up $1 million deposit by May 1st. So we got that done. And then we got the 15 raised by the end of June, or first part of June, and closed the deal on time. And when Dennis put out his queue about 30 or 35, 40 days later, he was absolutely correct. His market cap did expand by $50 or $100 million. But that mine was operating. It was a couple hundred miners, a couple hundred people working there in the Coeur d'Alene district. And of course, that is now called America's Gold and Silver, and has been operating, continued to operate since 2006 as a result of that transaction. I'm not certain if Coeur would actually have closed it or what they would have done, but they had decided or made a corporate decision to not put a lot more money into it, so it may have closed. So it's been a good thing from my perspective, having grown up in Wallace, right next to the Galena, and being able to keep those jobs, in the county, in the state, and see the Galena mine continue to thrive, and under the current wonderful leadership of America's Gold and Silver, who've done right by it, let's say. Of course, recently Eric Sprott put in a vote of confidence and put a large amount of money into it as well. So that was a good thing. So these are the types of things. And most recently, I actually went back to the Coeur d'Alene district and spent 4 years, starting in late 2016, getting the Bunker Hill mine revived. And the challenge there was signing a consent decree with the EPA, which nobody over. Basically, the Bunker Hill mine closed and went through a bankruptcy situation in 1992. And in 1994, a private owner named Bob Hopper bought the property, Placer Mining Company. And he did a great job of trying to hold the mine together, keep the assets intact, and so on and so forth over that long period of time. The issue there was environmental liability. So it's a brownfield project, and you've got the EPA environmental liability hanging over your head, and it was kind of an immovable wall, not movable wall that people couldn't penetrate and get around, and it took us a couple of years. But in May of 2018, we were able to negotiate a settlement and consent decree with the EPA, which cleared the way for investment in the Bunker Hill. And that got, approved by the U.S. District Court. It got approved all the way up to the very top of the EPA, to the very top of the Department of Justice. And, in last year, in 2020, April of 2020, we brought in a team of new managers, new people, new board, many talented people from Barrick actually are now in charge, and they're doing all the right things to get the mine moving again. And it deserves to be in production. Frankly, it was one of the great base metal silver mines of the United States, starting in 1885. So, these are the kinds, that has yet to sort of prove itself in the market, but I'm very confident that the company as it demonstrates the great amount of metal that's left in that mine, and with $1.35 zinc prices, I mean, it's poised to print money, in my opinion. And there's a big discovery potential there as well. So, these are the kinds of things I've done, and Obviously, if you're going to be in this business, there's some things that haven't worked along the way. And, but you learn those lessons. You learn lessons from the things that don't work, right?
Yeah,
Those are probably
certainly.
more important lessons maybe than the things that work sometimes.
Yeah. Obviously, you've had a long career, and you mentioned a few times luck. You've obviously had quite a few successes in the past, and like you just said, you've had a lot of failures as well. You mentioned luck quite a few times, but is it luck? I mean, you've been doing a lot of the work. You've been looking at a lot of properties, a lot of deals, and I take it, you've been positive a lot of the time. Whether some, obviously, a lot of projects fell by the wayside. Um, I suppose, can you give us an overview of those ones that were luck and worked? Why did they work, and why did some didn't work?
Well, maybe luck isn't quite the right word exactly. Maybe it's more circumstances. It's timing. I think timing may be the better word. For example, when you looked at the conversations we were having in 2002 with Newmont and Toby Mancuso, opening that door and talking to Steve Ocker at that time, who was with Newmont, and it didn't hurt that Toby's uncle Jim Mancuso had been a very successful mining entrepreneur, and Steve Ocker knew him well. So it was not only circumstances and timing, but it was people surrounding, just the right people being in the right places at the right time. Um, and Newmont looking to divest things after they had acquired Franco. So you had really the Franco team that was really a transactional kind of team in place, and they were running the show in terms of divestitures, and moved pretty quickly because, I mean, they built a huge company and a very successful company, and some people argue the most successful company ever built, in some
Yeah,
ways. And they didn't do it by sort of sitting and contemplating things for very long. They would move quickly if they saw an opportunity for a royalty or something, they were after it. So they were moving, they moved quickly because if the transaction didn't happen quickly, frankly, I mean, the gold price was changing rapidly enough that Newmont might have rethought it. So it isn't, I guess luck is an easy summary word, but really, when you look at it, it is the people, it is the timing, it is the project, all sort of coming together. The same thing with High Plains Uranium, that one property I mentioned. We're talking to Jim Boffman just a few days ago, actually, because we're looking at I don't know if you know what a notice of intent to locate is. If you have a split mineral estate in the United States, for example, if the surface rights belong to a private rancher and the mineral rights have been retained by the Bureau of Land Management typically, or even the Forest Service, you can go locate the minerals on that property, but you got to give notice to the landowner. And, we were talking about this one property, and it was a split estate property, and we had to file these NOITLs. And once you give notice of intent to locate, keep in mind, this is kind of the uranium rush. It's like a land rush going on. Once you file those NOITLs, it gives public notice that you're contemplating staking this ground. And there were people in Wyoming at the Bureau of Land Management watching that nodal list every day. And frankly, Energy Metals people were watching it, and that's how they ended up with half the project, because they saw our nodals. So we were able, though, to get half of it done under this really kind of cumbersome process of notice of intent to locate. And again, so that was, having the right person in place in the form of Jim Boffman, who was very aggressive about, for a small company and not with a lot of funding. Energy Metals was way better funded than we were at the time,
yeah,
with more people and more resources. But we just, the tenacity, I would say, of Mr. Boffman at the time was what made that a success. And as it turned out, that became the key property why Energy Metals decided to buy us for, a very nice number, a very nice premium to the market cap at the time that we sold out to Energy Metals. And then Uranium One a few months later played a premium for Energy Metals. So our shareholders got a double bump. So that, that isn't necessarily luck. I guess it was more, again, about about having the right person in the right spot at the time, and that was this at the president of the company, Mr. Boffman, being where he was at the time,
Yeah.
and
And I
his
suppose,
aggressiveness. Yeah,
it's having the confidence and keep knocking on people's doors, keep promoting yourself, telling people who you are, what you do. So it's that momentum and drive that
yeah.
and the need to keep going, which I believe then brings the luck and those breaks. Because if you did half of that work, you might have not got those breaks.
Wouldn't get to the finish line. Yeah. And frankly, there were a lot of uranium companies that kind of rode it all the way up and then rode it all the way back down. And some of them are riding it up again,
Yeah.
And so many of the same faces that were in the business, in the uranium side of things in 2006, 2007 timeframe, have created very successful companies, have advanced those companies, have added to the properties. They've also culled the properties that probably don't make sense. And now they've got very streamlined, companies that are awaiting another move in uranium, which I see coming as a result of, the need to reduce carbon emissions. I mean, it's my personal opinion that nuclear is a big part of that, So,
Yeah.
I think they're in the right place at the right time. And, I've dipped my toe a bit back into the uranium space a little bit with some properties that we've tied up. But
Okay.
there's some very good properties, companies that are out there. But again, they ended up kind of right. Some of them wrote it all the way up, wrote it down, and then are still around to write it up again. So there we go.
Yeah.
Yeah.
I want you to give us an overview of Gold Express mines.
Yeah, Gold Express started as an idea in June of 2020. So sort of in the midst of depths of COVID. We saw the movements in gold. This is again myself and Mr. Crosby, and we thought, well, let's acquire some things. And so we went out and found, we found a property down in Southern California that we liked a lot, down in San Bernardino County, that looked very interesting. We acquired some things in Sierra County, Nevada, California also. There's a lot left in California, in the mother lode country, and people are having a lot of success in Southern California and Imperial County and San Bernardino County with finding stuff and also getting it permitted. California is not a uniform state. Some counties are much more difficult than others. But California, one of the things you got to understand is that the counties have a big, big role in the permitting process, both at the exploration stages as well as further development stages. And so we think, certain parts of San Bernardino County are good places to operate. We found a good project there. I like the mother lode. I think there's a lot left in the mother lode. I mean, California, they didn't call it the Golden State for nothing. It's, it produced 115, 120 million ounces out of the state, and there's a lot left. So, if you can manage the permitting and manage the location, there should be a lot to do in California in this current gold boom. We actually then acquired 8 different properties in Nevada as a result of a single stroke deal with a guy that had a prospector who had picked up these properties over a period of 8 or 10 years and made a decision just to sell out. We started exploring those properties. These are all early stage properties, but do have some historical work on them. We also picked up some things in Arizona, early stage things, which we shot some geophysics on a couple of the properties. We've done sampling work. We've done the basic sort of things that need to be done preliminary to drilling in those properties. And then a friend of mine from Spokane named Terry Dunn came to me and said, I've got a drill ready project for you in western Montana, what he calls the East Coeur d'Alene Belt, which is right over the border from Idaho in western Montana on the extensions, the eastward extensions of the Coeur d'Alene district. It's the same rocks, the same group of rocks, same styles of mineralization. These are primarily silver, lead, zinc, copper type deposits. So we'll be drilling a couple of those projects. We actually got the drill permit about a week ago from the Forest Service. We'll be drilling a couple of those projects in August or so of this year. And then Terry also got us in touch with a group over in Dillon, Montana, that own the Yellow Band mine, which has about a 300,000 ounce resource on it, which we think is expandable, but pretty much ready to do the next step, which we view as a bulk sample out of the mine. So we're permitting right now with the Forest Service and the Montana DEQ a 10,000 ton bulk sample out of the Yellow Band. You know, the resource that's been calculated a number of different times by different people is about 300,000 ounces total, runs about a third of an ounce of gold, a little less, maybe 0.3 ounces per ton gold and about 2.5 ounces of silver. But it's pretty thick zones, 15, 20-foot thick zones. So we think very amenable to bulk mining. And so, you know, our next step is to go take a bulk step test out of it and get a feel for what the ground is going to be like and what the metallurgy does. And then see if there's a mine there, you know, frankly.
Yes.
There's a nearby mill located in Phillipsburg, Montana that potentially could be used. You know, you can't cyanide leach really in Montana anymore. Technically, you can cyanide leach for underground, and this would be an underground mine. But we understand the permitting of a new cyanide facility in Montana is going to be a very long road. So we're looking for alternatives. We're actually doing metallurgical testing at 2 different facilities right now, one in Denver, one up in Butte, to see if we can use flotation successfully on this ore. If we can't, we're looking at the possibility of shipping to a vat leach facility located in Utah, believe it or not. But you know, if you don't have any capex for the milling facility, you can afford quite a bit of trucking. So you know, that's how we're looking at it. But go ahead.
Yeah, carry on. No, I was just going to ask, how does it take, or how long does it take to explore and evaluate any sort of gold and silver deposits and properties the right way? Obviously, you've looked at so many projects. How do you look at and analyze any project? What's the best way, and how do you go about it?
Well, if you're starting from scratch, which most of the time when you're working on something in the United States or frankly, Canada, other places, you're hardly ever starting from scratch per se, because a lot of work's already been done somewhere. Somebody's looked at it typically, you know. So, you know, the first step I like to take is obviously get 2 or 3 very experienced guys to have a look at it and see if they can find any, you know, fatal flaws, you know, in the idea about this property. That might be geological, or it might also be permitting risk. It might be, you know, proximity to wilderness, et cetera, et cetera. But, you know, assuming that there's no big fatal flaws related to location and so on and so forth, you know, and if it's in the Western United States, there's probably somebody that's looked at it, you know, and typically a major has already looked at it. At some point, you just got to find the data. So, you know, we make a real big effort to find the data first. Something that somebody's already did, you know, it's very inexpensive exploration, frankly. And with the internet the way it is and everything being connected, you know, it doesn't take as, you know, USGS stuff is mostly all online, for example. Bureau of Mines stuff is online. Most state Bureau of Mines put everything online. You know, Arizona, for example, is great. Nevada's great. Idaho's pretty good. You know, there's resources like the Anaconda collection at the University of Wyoming, where you've got all of Anaconda's old data, you know, which is voluminous. You know, it's a little bit of effort to get a copy of a, you know, particularly with COVID this last year, it's tougher to get things out of the Anaconda collection, but things coming back online, you know, you send somebody to the University of Wyoming and give them 2 or 3 days of consulting in the Anaconda collection and find anything they can on the project you're looking at. And it's surprising how much some of these companies looked at. People like Anaconda, as I mentioned, Sarco, Duval Corporation, you know, all these companies had big efforts in the past, and it's well worth it to look at what they've already done. So that's the first step we take. And then, you know, you've got to duplicate their data too. I mentioned this thing in Southern California. We found a great report with Duval that done a lot of work out there. They'd done some holes. They did a lot of sampling. We sent a crews out there, and frankly, we haven't been able to duplicate their sampling. So I've been a bit disappointed. But that's better to learn that early than later. You know what I mean?
Yeah.
We haven't killed the property by any means. We have some pretty good looking soils, that show some pretty good responses and anomalies in many different indicator metals. But what we haven't been able to duplicate is the chip sampling they did. We don't have a sampling map of where exactly they went. So we're trying to find out, okay, they were getting 1.5 to 2 grams in a lot of different places. We haven't been able to duplicate that. So that's a warning flag for that property,
Yeah.
So I think it's very well, that's a first step. That's a great first step, particularly in areas like the US or Canada, Chile, more advanced countries. When you get into other places, you might be the first person looking at that property seriously. That's a whole different world. And frankly, it's probably beyond my realm of expertise. But there's some just tremendous guys that out there that have the tools, and I was very impressed, for example, with a guy named Sean Ryan. You might know that, no relation, but he's had some great discoveries in Canada, and now he's out in Newfoundland. And he took the approach of a instead of doing a soils thing over a month or so, where with 2 or 3 guys, he takes the approach, let's get 50 people and put them on it. And get it done in a day or 2. And, he does it, everybody's got an iPad and they've got real-time data, and he has an assay lab on site. So everything gets assayed. So when the team is there, he can go, if he finds a hot spot, he can go collect more samples instead of waiting for the lab to get back to you. And then, by that time the field season's over.
It's just shortening the time frame.
And it also allows him to, sort of fill it or kill it, which is great. So there's people doing that kinds of thing. People are making use of databases, and as and satellite data like they've never done before, and so on and so forth. So, there's no question that interconnectivity and our ability to make use of the networks and the internet and such is improving our capabilities on the ground. And that's kind of innovation we need in the business, right? So
yeah, certainly. The financial markets are sort of very strong at the moment, and it seems obviously a lot of money slowly coming into the industry. Why do you think there's so much misallocation in the system, and how can you protect your assets against inflation or devaluation?
when you say misallocation, do you mean into the mining sector or just into other sectors of the economy, or
I suppose both. Obviously, there is a lot of misallocation money in the overall economy, but obviously there's going to be money entering the mining industry, and I suppose at the moment it is probably going into good places. But as the industry does pick up and more money comes into it, there's obviously going to then be misallocation
Sure.
coming into the system.
Well, yeah, I mean,
sector.
this is true of any new industry, new technology, or any kind of a boom sector. It's going to attract capital. There's an old 19th century economist named Joseph Schumpeter. You may have heard of him before, but he called it creative destruction, right? I mean, if you'd been around on Wall Street in say 1999 to 2001 or 2, the dot-com boom, right? That's a perfect example of creative destruction, where capital gets allocated. People just sort of throw money at things. If you remember, people were saying, "Okay, I'm just going to invest in anything .com," right? If you have a .com, I'll invest in it. You can see some of that may be happening in cryptocurrencies right now, right? This is, and frankly, look at the .coms as a perfect example. I mean, a lot of companies that were around there that you thought, okay, this is definitely the winner, have gone by the wayside. And who emerges as the winners? People like Amazon or Facebook or whoever. It's hard to figure out at the beginning. But ultimately it gets figured out by the market, right? Those companies.
Yeah.
That's a process Schumpeter called creative destruction. So mining is cycles of boom and bust. And it depends on the metal prices, because top price of copper went back to $1 right now, and gold fell back down to $800. We may as well go figure out something else to do for a while until mining comes back, right? It's a boom and bust. So mining has this cycle of creative destruction every time we have these, I'm not talking about the small cycles up and down. I'm talking about the major cycle. You get this creative destruction type of cycle. And frankly, people, what do people do in the mining business? They dust off projects that somebody else had already been working on, and they try and carry it to the 2 steps forward, 1 step back type of process, right?
Yeah.
Like most of the properties, Yellow Bend is a perfect example. The property that we're working on in Montana. I mean, it was mined in the 1940s, direct shipped to the Anaconda smelter located near Butte. They mined silver and gold out of it. The current owners in the 80s picked up the property. The current owners are mining people. They explored it, they drilled it, they did all the right things. They chip sampled it. They moved it towards production by permitting it. They had it permitted in the late 90s. And then Montana imposed their cyanide ban, and the whole thing fell apart at that point. Nobody pushed it forward. It sat on the shelf for nearly 30 years, and now we're dusting it back off again, trying to make it work in this cycle. So, there are this process of boom and bust, and it's all necessary, frankly, in order to sort out who wins and who loses. And that's what the economy is really all about, And I think the greatest problem I see with this whole process of creative destruction, if you want to call it that, is interference, by the government, frankly. And I don't mean that, holding interest rates low, we know misallocates capital. So, the need for the government to have interest rates low it's required in order to finance the existing debt, which is gargantuan and can't be financed at 8%. So it has to be financed at 1 or 2%. Interest rates are being artificially held low. As a result of that, people can borrow at very cheap terms. That's a recipe for misallocation of capital, and it's happening all around us.
Yeah.
So,
Certainly.
in terms of this business, I think that, we have a lot of people in this sector that have really lived through these booms and busts. They expect them. And therefore, I think people are pretty tight with their money in this business. They're pretty careful. But the problem with this business is, frankly, I've been in this business 30 years. And, most people I deal with on a daily basis have been in this business about the same amount of time. We do have a number of very creative, very intelligent, good people coming up, but there's just too few of them. And so this sector, I think, is a pretty lean sector, and people do know how to spend their money wisely, I believe, in this business, because it's a tough business at the end of the day. But I think what we're going to hit the wall is the fact that many of us are just, nearing retirement age, and
Yeah, and
we're not going to be around forever,
Yeah, and I obviously I work in recruitment, and I'm seeing that anyway with some of the certain roles that I'm recruiting, whether it's a technical role. You can see there's fewer and fewer people that have the necessary skills for the particular role that I'm recruiting for. And that's across the world that you're seeing it. So yeah, there is a lot less people coming into the industry than previous years. Whether now we're obviously entering this super cycle, whatever you want to call it, whether there's now that the awareness or the awareness will slowly come to more people across the world that mining is a necessity. It's a primary industry. Hopefully now there might be a bit of a drive to get more people into the industry than obviously over the more recent years. Hopefully, and I hope mining companies are looking at that and trying to go out to the communities to other industries and trying to get people into the mining industry. Hopefully they are looking at that, but certainly there is less people coming into the industry, and obviously that needs to change.
I'm pretty optimistic that we'll fill the gap, but right now for the next 2 or 3 years, 4 years, 5 years, whatever this boom is going to be marked by a critical shortage of people, not only engineers and managers and such, but workers, miners and miners. There's not enough skilled miners out there. There's not enough skilled drillers out there. As people recruit, as people spread the word, so to speak, that these jobs are good paying jobs, and they're here to stay for a time, we'll attract more people in. But even companies of the size of Gold Express have to be prepared to invest in people to train them.
Yeah,
it's the only way to get people, and train people and make a fair and good work environment, good benefits and pay and all the things you need to attract people these days, right?
yeah.
So one of the things about mining, it's been true in the past, is that many people follow their parents into this business, which is what I did. My father worked for Sarco for 40 plus years, and his father was an entrepreneurial miner in Leadville, and my grandfather's uncle was an entrepreneur in Leadville, Colorado. So that's how this thing goes. When I went to high school in Wallace, we had a vocational mining school where guys that were juniors and seniors in high school took half their day as a junior and senior and learned how to mine, which is, mining companies supported that locally, and they had a group of miners coming out of the high school every year that they recruited from, which was good. And, I think we'll see programs like that reemerge. We have to.
Yeah, certainly do. And it shouldn't just focus on existing people in the industry, bringing their families in. Obviously, to
Absolutely.
have that skill shortage and to shorten that skill shortage, it needs to be people from the outside that may not know much about mining, that may have heard about mining, and it's just educating them that it's a wonderful industry. It is an industry for life that you can get into. There is these obviously peaks and troughs, but you live through those.
Absolutely.
And it's just encouraging those people from outside into the industry, which hopefully we will start to see over the coming years.
Well, and exactly, and I'm glad you added that point, because it was a point that I didn't quite make, that even, generationally people are attracted to the business, but we need to reach outside of that, absolutely, and reach out to others.
Yeah.
If you can get a job at one of these great mines when it's first starting up, I mean, the person that came on in the Mesquite in 2002 has had a 20-year career there if they stayed there, right? Bunker Hill mine, when I was looking through the old records, I mean, it started operating in 1885, operated continuously till 1981, almost a century. Now it's reopening, right? But they had some huge stopes there, and frankly, at that mine, you could have started working in a stope, which, as you probably know from being in the business, a stope is an area in the mine where you go mine the rock. It's where the rubber meets the road, right? You could have stepped into a stope there in the early 1930s and been in the same stope in the 1950s. In the same stope, not only the same mine, okay? So, mines can be wonderfully long-lived assets once they're up and going, and it can be a lifetime career for people.
Yeah.
We did the deal in 2006 at the Galena Mine. Most of the people there that were there in 2006, some of them are still there working, but many of them retired. And some of them started their careers there in the 1980s or so, and certainly are near retirement or retired right now. But, guys that hired on when we first took over the mine in 2006 at US Silver and now America Silver, it's going strong, and they've been there like whatever it is, 14, 15 years. So, it is not a short-lived business once you get one of these mines up and going, because they're built for a long, typically long lives.
Yeah.
If the great ones anyway.
Yeah. You've obviously been in a few commodities, and you mentioned obviously you've been in gold, you've been in uranium. What What commodity do you think is going to explode over the coming years? Is it going to be one of the precious metals? Is it gold, silver? Is it going to be uranium? Is it going to be copper? Is it going to be one of the battery metals? Is there, for you, is there going to be a focus on a particular commodity, or you're looking at a few different commodities? Or do you think there's going to be one outstanding mineral commodity over the next, say, five, maybe 10 years?
Well, I mean, you know, you didn't mention silver. I've always liked silver. I grew up in the Silver Valley, so to speak. But I think copper, frankly, you know, they call it Dr. Copper. With the demands that we're putting on copper for uses in electric vehicles, for the talk about infrastructure that needs to be built, you know, rebuilt in the United States in order to do that, you know, and in the United States is just one country. Every country needs copper. So I think, you know, I don't know if it's going to explode further in price, but I think we're going to see copper at, you know, quite easily $6, $7 and remain there for a long period of time in order to coax enough copper out of the ground to meet all these needs. And again, you know, I also question, is that the best use for our copper? You know, are we wisely using our copper at this point in time? You know, I mean, it's something I think we need to think about. Cobalt's another metal that's in short supply, you know, that's going to be used in electric vehicles. You know, I know they're trying to diminish or reduce the amount of cobalt being used in certain batteries. It's a supply the United States doesn't have a lot of, and it's a
No.
critical element, strategic metal used in aircraft engines and many other esoteric applications. Is it the best use for this critical mineral? You know, which you know, that becomes a policy kind of question, but something that maybe people ought to pay more attention to. You know, people have sort of woke up to the rare earths, you know, and the critical supply shortage we have. And many people have woken up to the fact that, you know, the cell phone they use every day, every minute of their lives practically can't be built without rare earths. And so, you know, we don't tend to pay attention to these issues and until they become real critical issues, which is scary. You know, I mean,
Yeah.
it's kind of not a good thing. We don't have a little more foresight into some of these elements. You know, it wouldn't surprise me though that the platinum, palladium, PGM group is also one that gets really sharply into focus in this upcoming era. I mean,
Yeah.
you know, it already has in some respects, but again, there's not that much of it. It's certainly in the Western U.S., right? Not very
Yeah.
much. So,
Yeah. So, concluding, what's the outlook for Gold Express Mines?
well, I mean, what we want to do, as I mentioned, it's a private company at the moment. We expect, you know, to go public at the right time in the next year or so, in some fashion, either in Canada or possibly in London. You know, I've listed some things in London in the past, or you know, maybe here in the United States. But what we'd like to do is either be in or near, you know, production at the Yellow Band property, you know, around the time we go public. So, you know, our focus in the next year or year and a half is to get that property in production. We'd like to have cash flow. We'd like to, you know, separate ourselves in that respect from some of the other more exploration oriented companies, which I think, you know, a lot of investors like to see, having cash flow and not having to go back to the market, you know, to fund exploration programs. So that's what the outlook is. We got drilling programs happening, as I mentioned, in Western Montana. I think, you know, either later this year or early next year, we'll drill some things in Nevada that we've been working on pretty hard. Possibly one of the targets down in Arizona. I'd lost you there for a minute.
Yeah, no, we're back again. So, as
Okay.
you were saying,
I was saying that the focus on Gold Express is going to be achievement of production. You know, as I mentioned, we're doing this bulk sample test and finishing up our metallurgical work, but we'll lead to production at Yellow Band in Montana. And following that, you know, we'll also have drilling programs happening at various projects in Nevada, Arizona, Western Montana, which should lead to some excitement as well. So all of that leads towards a listing sometime, within about a year or so. That's the plan.
Yeah.
But we'd like to be a listed company and either in production or very close to production with a plan to achieve some cash flow and earnings.
Yeah. Well, it seems you got your hands full. You've got a lot of projects coming online over the course of time. So wish you well in your future. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? Are you on any social media as well?
Oh, I'm on LinkedIn. And also my email is jr@goldexpressmines.com. That's jr@goldexpressmines.com. And, just reach out. I'd be happy to talk to anybody about our plans. And if they had questions about or comment on any of the content that we covered, I'd be happy to talk to them about it.
Yeah, no worries. So I really appreciate your time, John. And yeah, our audience appreciate if you can share and like this episode, share it amongst your friends, family, other people in the mining industry, and maybe people that are not in the mining industry that wants to, I suppose, get a better understanding of what mining is about. Obviously, look at hearing John's career, what he's done. So yeah, appreciate if you can pass this episode on to other people.
We will absolutely do that. Yeah, I think it's good to reach out beyond our sort of safe envelope or safe zone of people and spread the word about mining. It's a very critical industry for the good of everybody.
Certainly, and you never know, people may listen to this and decide to get into the industry, which is obviously what we discussed.
That would be wonderful.
And what we need.
Wonderful. You bet.
Yeah.
Thanks a lot very much for your time.
Yeah, and I appreciate your time, John. And I appreciate the audience for listening. And as I said, keep sharing this episode and I appreciate your time for listening. So until next time, happy mining.